All right, that is 2:05 by my clock, so let's jump in. All right, well, first of all, thank you all so much for attending my inaugural webinar on dual-use technology, dual-use pitch decks. So basically, here's what is on my mind. I want to try to set everybody here up for success, right? So here's what we're all trying to do, right? We're all down here. We're all trying to get funded, right? So in order to get funded, we need to do a couple things. We need to agree to deal terms, we need to get through diligence, and we need to get through a bunch of calls. We got, first call, second call. Hell, there might be a dozen calls before a fund is going to be willing to invest the time into a diligence. Because I'll be honest, I've done a bunch of diligences in the venture space. It's a lot of time. I mean, we're talking dozens, maybe hundreds of labor hours. So at the cost of a VC, that actually ends up being quite a bit of money invested into doing a diligence. So we got to get through the calls. And what's this right here, right? So before we even get to the calls, we got to get them to give us a call, which generally means we got to get a deck. So let's be clear. I just want to set table stakes a little bit. Like, what is the deck here to do? The deck isn't here to get us an investment. It's not here to, that's not the end all be all. The deck is just there to convince the venture fund that, hey, you know what? There's actually enough there that we're going to take a call. So deck is super important. We put a ton of time into it because that is the first exposure a potential funder is going to have to us. And like with any other first impression, it's super important. So I want to just talk a little bit about what the deck is here to do, how myself, the fund that I'm with, how we're thinking about making an investment, so that you could always keep that end state, the goal of getting funded, in mind as you're creating this deck. So if you have a strong background in venture, apologies if you already know a bunch of this stuff, but I do think that it's helpful to help you calibrate what to put in your deck, knowing what its job is and how I'm going to be evaluating it as the reader. So I'm going to switch over to basically my thought process is, how much is it going to cost me to buy some equity? And then how much is that equity going to be worth when I sell the equity at the end of the investment period? So my goal is to maximize this ratio. So this number as a multiple of this number. The bigger the number, the happier I am, the happier my investors are, the more likely I'll be able to raise a second fund, the more likely I'll get a bigger fund, the more likely I'm going to get brought in on really good deals from elite venture funds. So this is the ratio. This is the ratio I have in my mind when I'm reading a deck. Could this start off very small and become very big? Okay? So let's talk a little bit more about what that actually means tactically. So tactically, what that ends up looking like is this. So these numbers came straight out of the Power Law. If you ever want to read a really good book about venture and venture decision-making and economics, highly recommend the Power Law. It'll give you a great window of insight into how investors think about you and your company. But this is super important for you because it goes back to, are you going to get an investment? So check it out. Here's the outcomes for a venture fund in terms of the outcomes of the companies that they invest in. So about 50% of all the companies that an investment fund is going to invest in, they're going to lose money. So less than 1x return. Typically that number is 0. It's just the company fails. All right. About a third of the time, the companies that you invest in is going to break even. Then you've got a little bit here, here, and here. Then you've got about roughly 5-ish, 10%. That'll do 3 to 5x. So 3 to 5, the ratio here, 3 to 5x. A few of them are going to go 5 to 10x. And then a few of them, about 1 in 20, is going to go more than 10x. Now, that seems like a small number, right? That 1 to 10x, excuse me, a very small percentage are going to go 10x. Turns out these are by far the most important because they represent 60% of the fund's returns. So what the important thing here for you to understand is the outliers, the ones that just take off wildly and are wildly successful, are the companies that are really the most meaningful to the fund. So what does that mean for you? So it means for you as a company trying to raise is you want to be out here, the bazillion-dollar range, right? So these are just two lines. These are just two, like, there's one company that has this possibility of outcomes. The green line here, so very strong probability that the investment is going to go to zero. The company will go bankrupt. But there's a very small but non-0% chance that it'll become worth $1 bazillion. Then you have a second probability of growth, like this one in red, that it's probably not going to lose money. It's probably going to do pretty well. It'll probably get 3 to 5x returns. It'll be a healthy company, and this is great for you as a founder because this could be your services. This is a good, steady stream of revenue kicking off every month that is going to become and you're going to pay your rent. You're going to send your kids to college. It's great for you as a lifestyle, but if it tops out at maybe $10 million, a relatively small amount, it's not venture investable because we're looking for these. We're looking for these big, disproportionate 10x returns, these big hits, the unicorns, you call them home runs. And by the way, please ask questions throughout this. I'd rather pause, answer a question that comes into chat. I know there's probably about a 10-second delay on the chat, or between me presenting and you guys seeing it. So it may be a little bit delayed, but please ask questions and I'll stop and address whatever you're asking about. So the point here, the takeaway for this slide is your job is to convince me as the investor, as the reader of your deck, that there's a chance, even if it's a small chance, but there is a non-zero chance that you could become massively valuable. Okay? All right. So what am I going to look at? So here's the questions I try to ask myself when I'm evaluating a deck. And we're about to go look at 3 decks. We're going to ask ourselves these questions against each deck so that we can figure out, hey, were these decks successful at convincing the reader that you might end up way out here being worth $1 bazillion? Okay, so here are the questions. So number 1, can this company become crazy valuable? All right, well, in order to figure out can you become crazy valuable, we got a couple things to figure out. So number 1, what problem are you solving? Is that a big problem? How much are people willing to pay? Are they willing to pay just a couple, $5 a month to have that problem solved? Or are they willing to pay thousands of dollars a month for a license? Then how much are they willing to pay and how many people have that problem? Next, is there a moat to keep profits high? And let me pause on this one for a minute because a lot of people don't understand this one. So let's imagine you're starting a company, you make widgets, and let's say that you're really successful. That's awesome. But it also means that you're going to have a lot of people following you. You're going to have a lot of competitors showing up to copy what you're doing. And so the question on my mind is, hey, if 10 other people come compete, will that degrade their profit margin? Is this going to become a commodity? Are they going to have to drop their price in order to compete with all the new entrants? Because if your profits, you might still be making good revenue, but if you have to squeeze your profits, well, now all of a sudden it's are you actually going to be valued very highly? Because lower profits, lower valuation, right? Okay. There are a lot of ways to create a moat. It could be like a social network has a great moat. Like a social network, the more people that are on it, the more valuable the network and the harder it is to displace. So that's why a Facebook, because it has such a strong network, is able to continue to have very high profit, even though there are a lot of competitors out there. Or if there's some technology moat, if you have the patent on the IP that you need to make this company run and you can keep your profits very high, because you have that technological edge, that barrier to any competitor, well, you could also keep your profits quite high because of that. Cool. All right, so next, is your solution plausible? So you've identified a problem and maybe you have a moat, maybe you have some sort of way to keep other people out, but do I believe that you can create it? And one of the people in the fund that I support, his favorite example here is teleportation. If you can create teleportation, you will make $1 bazillion. But does anybody believe that you can create teleportation? Well, maybe yes, maybe no. Okay, so let's see here. Do I think that your solution is plausible? Well, first sub-question is going to be, does the solution solve the problem identified here? Can the team make it? Like, do you have the technical chops to do it? Then number three, big question, is the sales model plausible? So, okay, cool, you've identified a product, you've identified a solution. Do you have a plausible way to actually sell it? Okay, great. So within that, the question is going to be, who's the customer? Do you know them? Who's the user? Can you reach them? Like, do you have a plausible way to actually reach them? And this is a big one in the defense market. You might say, hey, I know that the DoD needs better cyber, they need a new UAV, whatever it is. But the government is a notoriously difficult customer to access, both in terms of getting feedback and in terms of getting like actual sales. So do I believe that you can reach them? Assuming that you can reach them, do I believe they're going to buy it? Or have you set your price point so high that I just don't believe that they're actually going to buy from you? Great. Last part of this is, can you sell? And you wouldn't believe how many founders we meet that you meet them and you're just like, yeah, you've got a great product. You've even got a reasonable sales model. I just don't think that you've got the sales gene. Cool. All right, number 4, can you beat the competition? So within that, who's the competition? What's your differentiator against them? And then, is the solution 10 times better? Yeah. So let's talk about the solution being 10x better. So this is a classic kind of a, I don't know what you want to call it. This is like a classic rule of thumb. If you're trying to displace an established product, so if there's a current solution to this product, or excuse me, to this problem, generally speaking, you need to be 10 times better than the established solution in order to get there. MC in chat says, everything is tech here. I want to create a physical prototype product that will cost about $14 million for a prototype. Needs a mined DoD field for demining in a hangar-sized lab manufacturing spot. Okay, great. So we're going to talk about what it's going to take to, I think that everything, well, I hope that you're going to find some answers here that are helpful, because the reality is no matter what you're building, if you want investors to give you cash, you're going to have to convince them that there's some path to return. I hate to be cold-hearted. This is venture capitalism, not venture socialism. So if there's no path to return, VC's probably not going to be your funder. Now, there's a whole world of U.S. government grants and other non-dilutive capital that isn't focused on getting returns, financial returns. They're interested in mission returns. I have an entire YouTube channel where I teach about that for free. Go check out my YouTube channel. I've got lots of videos talking about those programs that may be a better fit if you're not a good fit for VC. Okay? So back to this. And then the last thing on my mind is, can you validate everything here? So here you make a bunch of assertions in the deck. Is there any validation that you can actually do these things, right? And so for that, what I'm talking about is generally it's traction. The most common form of traction here is going to be sales. But if you don't have sales, if you're a really early company, that's fine. But we would want to see customer interviews. Do you have 20 customer interviews that demonstrate? Because if you can do a customer interview, that's a lot of validation, right? It's validated that you can access the customer. Like if you can't get someone to give you 10, 20, 30 minutes to give you customer feedback on your idea, well, I don't believe that you're going to be able to get them to give you money. Okay? So that's what we're here to do. That's the last thing I'm looking for. Before we jump into the decks, just want to say thank you to our 2 sponsors today. FedScout, if you're looking for a great way to find government grants, non-dilutive capital, highly recommend FedScout. Second group I want to recognize and say thank you to J2 Ventures. That's the fund that I support. I genuinely believe that they are the best dual-use investors in this space. So thank you to J2 and to FedScout. And with that, let's look at some decks. All right. So these are the questions. I'm going to try to keep these on screen so that you can kind of play along with me. You can look at these. And then as you're doing that, we're going to look at the deck over here. And you can tell me, please jump into chat. Tell me, hey, do you think that this deck is addressing these questions? Do you see gaps that would be, problematic? All right. So first presentation, and by the way, these were heavily redacted. These are companies that I've talked to, worked with. So this is the first time doing this, and so I kind of over redacted them, probably just because I wanted everyone to feel comfortable sharing their information. So my apologies, number one, that some of them are a little, I've covered up some of the beautiful graphics that they had. All right, so this one, eliminating aerial threats simply, quickly, reliably, inexpensively. So UAV defeat, presumably, awesome. All right, that's a major area. I'm already intrigued. Okay, first one. Looks like they've got this idea here for a metal ball. It kind of looks like a metal blimp. Okay, so here's the first thing that gives me pause about this. So generally speaking, as a entrepreneur, I want to see, so I'll do this talking to the camera, I guess. Yeah, tell you what, yeah. All right, so first thing I'm noticing right here is I'm always hesitant about companies that just start with a solution. Like they're like a hammer looking for a nail, right? They've got an idea for a solution and they want to go find a person who has that problem to test it. I think that's a really tough place to start a business because you're always, in general, the solution is fairly straightforward if you know the problem. So I prefer to see decks where they start with the problem, give a really crisp identification of what it is, number one. Number two, everything else in a deck, generally, by starting with the problem, you're giving me a framework to understand everything that comes after. It's like, here's the problem, now I understand why the experiences of your team are relevant. Here's the problem, now I understand why your solution makes sense in the context of that problem. Here's the amount of money that you need, now I understand, is that kind of like generally a reasonable amount of money to ask for in the context of that problem, okay? So first reaction, I wish they would start with the problem. Instead, they're starting with a bunch of information about their solution and like in a fairly technical way. So that's first reaction. Okay. All right. This is next page. More details about the technology, the specs, the actual the technical development of it. And this is, I think, one place. I think this is one place where there's actually a really big difference between people who grew up in SBIRs and like grants and other pieces of government funded or like labs, or if you're coming out of a university, the proposals you submit to the government, the proposals you would submit for like whatever NIH or NSF funding, it tends to be very technical right off the bat. And I think a lot of people, when they make the transition to saying, hey, I want to go apply for dual use defense oriented VC money, they're like, oh, I'm going to take that instinct of being very technical first over to their pitch deck. And so they go really heavy in technical specs and capabilities and, this much weight, this much torque, whatever it is. There's just fundamentally different. Like as a VC, I generally want the vision. Like what is the concept that's going to get me to that $bazillion exit? And then once I understand that, then explaining your solution. That's great. But I would encourage you, this isn't a technical pitch, this is a funding pitch, different interests. Okay, so next thing, let's take a look at the next thing. More about the technology, talk about the velocities, more detailed engineering specifications, details about the controls, and then the costs. So my fundamental reaction to this one is that, we're missing a lot of the elements here, right? We're missing what is the potential market value. I have no sense for, is this going to become an insanely valuable company? So, what is the path? What is the size of the market? Great. Is their solution plausible? Maybe. I'll say yes. Is there, are there that many UAVs out there? Could a metallic blimp defeat them? Possible. Okay. What's the sales model? This is another one. It's like really unclear. Like, I assume the DoD is the market, but maybe it isn't. So I don't have any sense for like how much they're going to try to sell them for. How many people would buy them? Who's the customer? How are they going to reach the customer? Can the team sell? I really have no idea from this presentation, from this deck. Can they beat the competition? Right now there is no. That looks a lot like what. There was no conversation about the competition, right? I don't know, how is the DoD defeating UAVs today? So, Yeah, sorry. So I'm going for, yeah, sorry. So responding, um, so yeah, so reading this question off of chat. So, do you have, by the way, hi, Ann. So question, do you have any assumption that this company was or was not funded with a previous SBIR? For example, we might be relevant for folks looking for more secure matching for TACFI or StratFi. Yeah, great question. I will say, of all the decks I see, half have gotten an SBIR or some other form of non-dilutive funding. It's just quite common, right? You know, it's like people who are thinking about selling to the defense market are going to be thinking about like, hey, what are the other programs out there? And of course, everyone loves SBIR. I've funded two of my own companies with SBIRs and STTRs. I've got a YouTube channel about this. I love SBIR and STTR, but it's not a requirement. There's absolutely no requirement that you have done an SBIR to get a venture round. Now, if you're applying for StratFi or TACFI, and for those of you who aren't familiar, StratFi and TACFI are Air Force programs that basically match. I'm oversimplifying, but you know, take it just for this conversation. StratFi, TACFI effectively match venture funding from other people, right? So, I'm sorry, from investors. It's government matching for investor funding. Whether or not you're going for StratFi, TACFI, or just a regular round of funding, I don't think it matters because in order to get StratFi or TACFI, you've got to convince an investor to give you $1, you know, preferably millions of dollars, but at least $1, and you're not going to get a dollar from a venture investor unless they believe that there is a path to significant profitability. Like, it doesn't help me as an investor if you get StratFi and TACFI and then either go out of business or you just have like a 3x return. It's great for you as the founder, but like for me as an investor, it's not going to move the needle on my ROI. So I'm not sure it matters, to be totally transparent. So that's just my thoughts on that. So I don't, yeah. So StratFi, TACFI, or just a traditional funding round, I don't think it matters. But great question, and thank you. Please keep asking questions. All right. Yeah, there's a competition. Why do they need the money? This deck did address that pretty well. It said, hey, we want to build this prototype. Awesome. Are there projections? I didn't see any projections in this deck. It was really product focused. So yeah, I don't really have much to go on there. There were no projections. So again, it's hard for me to gauge or have a sense. I can get excited about investing in them. And then finally, did they validate any of these things? No, I didn't see any validation. And so, yeah, so those are my big reactions to this deck. And you know, I'll be honest, you know, it's one thing that's I think underappreciated that I'll be honest, when I was purely on the founder side, one thing I didn't appreciate was how emotional venture is, right? Because you're investing in really early stage companies, it's very hard to assess, hey, is this company actually going to be successful? I don't know. Maybe it will, maybe it won't. But I'm kind of going with my gut. And there's a very fine line between this is an insane idea that could actually work and it's going to change the world, and this is an insane idea that like is going to get me laughed out of the room. But as an investor, so every Monday morning we have our team and we all bring our new candidates to the group, and we're saying, hey, this is something I'm excited about. I think there's something plausible, you know, and you know, I'm not saying it's going to work. I'm not going to die on that hill necessarily, but I've got to present it to my peers. And if all of my peers are like, that's insane, you're no. Well, now I look bad in front of my peers, and you know, nobody wants to look bad in front of their peers. So there's a certain amount of this that's just about giving me the confidence as the first reader to say, yep, I'm going to walk this into the Monday morning meeting, present it, and really make a strong case for why we should take that first call. Great. Question from Sheila. We're creating augmented reality through excursions along a path through smart cities in the civic, tourism, entertainment sector, which can also be used for military training summits. Are we allowed to do both? Or are we expected to shift our whole focus to military? Great question. And in fact, at least at our fund, we are very, very skeptical of companies that want to go all in on defense. If you've watched my YouTube channel, I've got an entire video called "Is DoD the worst first customer?" Spoiler, it is in fact the worst first customer. So I think the ideal dual-use technology is like, choose a number, 80% commercially focused. We can see a very strong, plausible path to like, where's this? Just I'll hold this up here. It's like, we can see like a really plausible path to you becoming worth $1 bazillion just on the commercial side. And then it's like, but you know what? The DoD stuff is going to be like the cherry on top. It's going to provide some non-dilutive funding. It'll provide some very secure recurring revenue from defense sales. Like all of that's awesome, and it's the reason why we do it. And I think that DoD is a wonderful funder for your early stage R&D through SBIR, SITRs, BAAs, CSOs, all the other engineering non-dilutive that they provide. And then I also think that DoD is a really amazing late stage customer. So if you're like, if you're at Series B and you can withstand the investment of a 2-year sales cycle, awesome. By all means, that's one of the things that we're there to do as a dual use investor. We're there to help you with your federal sales strategy, your contracting, figuring out where the budget is, figuring out who the customers are, all of those things. So Sheila, not only are you're not expected to shift your business to defense, and in fact, it's a bit of a red flag if you want to. So yeah, I hope that answers your question. And please, if people have other questions, feel free to just keep asking them. And we'll just while you're asking questions, I'm going to move on to the next deck, unless anybody has any other questions about the UAV defeat deck. Okay. Hey Jeff, what would be the flow of a pitch deck for startups with dual purpose, a commercial application and the DoD application? This essentially creates 2 different problems with 2 different solutions. Yeah, great question. I'm actually thinking about creating like a webinar series. Actually, some of you may have seen it. I've actually posted some more webinars, one on market sizing and one on competitor identification and differentiation in the defense sector. I'm going to be running those. I'm going to try to do these once a month, and whereas this one is more of like hey, let's go look at some decks, talk about them, the good, the bad. The next ones are meant to be much more about like, hey, how do you build this specific analysis, this specific slide? And I bring that up because of Anant's, I'm sorry if I mispronounced your name, around your question. I really encourage you to start with your commercial pitch deck and add a couple slides to it. So it'd be like, here's the commercial problem, and if the defense problem is different, add a second slide which basically says, so here's the commercial problem, next slide, here's the defense manifestation of that. And I say that for a couple reasons. Like, number one, you're busy, you've got a million priorities. I think it's hard to have 2 different versions of your deck. Like, here's the just pure play commercial VC deck, here's the dual use deck. I would just encourage you to create like 2 slides and say, here's the commercial problem, here's the defense problem. Here's the commercial market, here's the defense market. Here's the commercial competitors and my differentiation. Here's the defense differentiation. So more along those lines. But I would encourage you to like combine certain slides. So like your revenue projections, I think that's a really good one to have as a single slide, just because it's like money's fungible, right? Like whether you get $1 from a commercial customer or whether you get $1 from a defense customer, kind of doesn't matter, right? It's like it all ends up in the same place. It ends up in your valuation. So from my perspective of like trying to guess, like, hey, could this company become a $1 bazillion unicorn? Yeah, that like having those combined is nice. The team, of course, typically that would be combined, because like you only have one CEO, right? You only have one chief of product typically. And like early stage companies, they typically have one engineering team. So you'd have those people in, all together. Yeah, I'm trying to think of other slides where there'll be a difference. I hope that, Ananda, I hope that answers your question. Yeah. And then, like I said, we'll have some more webinars coming up about individual slides and how to develop the defense or government market versions of them and how you integrate those into a more commercial deck. Cool. Next question from Sheila. Okay, thanks. Do you have any recommendations for how I should get started? We're post MVP, filling out our commercial entertainment pipeline currently. I mean, I would argue that you want to take two paths. First path is you're always good to go after SBIRs, STTRs, other non-dilutive funding. It is a lift, but if you really think that your solution is going to address the need that's articulated in the SBIR, STTR, I mean, it's an investment of time, but I think the ROI is all in your favor. Like the ROI of doing an SBIR, STTR, it's really beneficial, assuming you have like a reasonably plausible product. So yeah, so Sheila, my recommendation, build your MVP for your commercial side, and then whenever you're ready, start going after the non-dilutive SBIR, STTRs, and then, you know what, just as you have opportunities, just demo your capability, your commercial capability. Like right now I'm supporting a company that is commercial first, but I'm helping them just demo their solution to defense customers. Transparently, I don't think they're going to be making a defense sale for a couple years. It's a lot of time, and they need to be focused on quick revenue, quick feedback, quick hits, which is much better on the commercial side. But I can see a real defense play for them. I can see where certain defense agencies and missions would be really excited about what they have to do. So yeah, by all means, we're going to start planting the seeds so they can start building the relationships, and we can start doing some of the groundwork for defense sales now, so that a couple years from now, once their product is matured with their commercial customers, they're set up for success with their defense customers. So Sheila, hope that's some good guidance there. Cool. Well, by the way, thank you for all these questions. I love making this more of a conversation rather than just me, looking at the screen talking. Okay, next deck. High performance, efficient undersea propulsion. All right, let's take a look at this. Let me go switch over to the top down there. All right. Cool. Let me arrange this so you can see the questions. Okay, and by the way, if anything about this layout here is hard to see, or you want me to change anything, just let me know, and I'll try to rearrange stuff. You know what? I'll put a little plant there, just a little bit of window dressing, make you feel more at home. All right, so let's see here. All right, first thing, we got the team. Okay, obviously these are not the real pictures of the people here. These are stock photos that came with this stock deck that I grabbed as a way. All right, here's my first reaction. It's sort of similar to the last deck, which is it's hard for me to understand if this team and the companies that they've worked for and the schools they've gone to and the degrees they've gotten are really exciting for me unless I understand what problem they're solving. Like, if you're trying to solve some really deep in the weeds cybersecurity, or in this case, like, undersea propulsion, but everyone's got MBAs and law degrees and computer science degrees. Well, it's like, even if you went to a really good school, it's like, but cool, but are you actually positioned to do stuff that's contributing here? Or similarly, it's like, hey, if you're doing something in undersea propulsion, that's awesome, but if all you've ever worked for are companies that do things that do not relate to undersea systems, well, I'm like, is that actually all that helpful? I don't know, but I'm just going to center myself here a little bit. All right, you can see, there's the camera, there's the top-down view. You got a little behind the scenes here. So, number one, again, I encourage you, start with the problem and then go into the team, the solution, everything else. It just helps me contextualize how valuable the team is to solving this problem. Okay. All right, so cool. Got the team, got their backgrounds. Next, we're coming to their advisors. This was a weird one to me. It's like, as I've it's like anything else. You watch the first 10 seconds of a YouTube video, you watch the first 5 minutes of a TV show. If it doesn't hook you, you read the title of an article to decide whether you're going to read it. You only have a couple slides. You have like probably 2 or 3 slides to convince me that I'm intrigued. I'm interested. I want to learn more. I guess my question would be like, is the team and the advisors the most impressive thing about this company? And is that the thing that should get me so excited about them that I'm going to read more and get invested in like advocating for this company? And like, I guess you can make the case that like having really impressive advisors is like a form of traction. Like I know Theranos like famously did this really well. Like their technical product was a bit of a mess, so they really leaned into their advisors. They were like, look, we've got former secretaries of defense and state, and like we've got the smartest people you've ever heard of on our board. And because those smart people believe in us, you should also believe in us. And like that's cool. Like I guess in a roundabout way, having really impressive advisors can be a form of traction and validation. I don't love it. Yeah. Okay. Sorry, question from Marilyn. We're finalizing a direct-to-phase 2 demonstrating the unique efficacy of our non-toxic water treatment to improve filtration systems to remove PFAS toxic chemicals from drinking water. Awesome. I mean, yeah, it's an important mission. Yeah, good luck. Like legitimately, it's an awesome program. Sorry, from Scott. I spent 1 page describing the problem, the current solution, and 35 more pages describing the solution. Wrong ratio, question mark. Yeah, I'd say so. Like, again, the purpose of the deck is to get you the phone call. So you're not there to sell them on the technical merits. I really encourage you to the extent possible. Guy Kawasaki, I think his thing was 10 slides. I think that in dual use decks, you can be a little bit more than that just because you might have 2 of a few slides. It's like defense problem, commercial problem. So if like your deck ends up being 15 pages, that's fine, I think. But I do think that, less is more. Cut to just give them the highlight reel, give me enough to answer those questions that we're going through, and then like leave me intrigued enough that I want to set up that call. Okay. So yeah, I would say that's probably not the ratio I would use. You might have like 2 pages on the solution and then spend your time on like, who's your customer? What's the market? How are you going to get to evaluation? Certainly hundreds of millions of dollars, preferably billions of dollars. So like make the financial case. I would repurpose a lot of the technical pages into financial pages and just compress the whole thing. Okay, back to Maryland. It says 700 bases and hundreds of municipalities, etc., have this serious PFAS problem. What are our next steps? I would suspect that your next steps are run pilots, demonstrate efficacy, and then demonstrate that there's a business model. We've gotten pitched by a number of companies that are trying to sell to municipalities, cities, SLED, state, local, education, police. It's hard. I mean, transparently, like in my experience, cities are very bureaucratic. They have long sales cycles. There's a lot of entrenched vendors. There are only a few municipalities that are big enough to actually, be meaningful customers. So you're talking about typically you're talking about large cities. So I think as an investor, whenever I see that somebody's trying to make state and local their primary customer, I'd want to see that they've had some traction and they have some virality so that you're able to say, hey, look, I'm going to be able to decrease my cost of sales dramatically. But in your case, if you've got some pilots going with bases in municipalities, then yeah, run your pilot, get your phase 2 funding, build out your product, demonstrate the technical success of it, and then take those demonstration events and where you've preferably actually like gotten paid for them to then go on and get more commercial customers and spread. And And by the way, we have invested. We just invested. It's public now. We just invested in a company that helps with municipal hiring, and it's going like gangbusters. Like every time they go to a conference, like a state and local government conference, so many people are like showing up and like asking them questions, be like, hey, can you do this? Can you help me with that? And so that's the sort of traction that gives us the confidence that even though I believe the state and local is a difficult customer, that you've got a solution that's so compelling that people are going to buy it from you. So I think those are probably your next steps, is just building that financial case. Sweet spot for check size. I think the sweet spot is the smallest amount of money that you can raise, and while still being able to answer the biggest risk in your sales model. So like if the biggest risk in your path to becoming a bazillion-dollar company is technological. So like if there's just like a big, like if you say, hey, I'm going to create teleportation, well, what is the core risk within teleportation? Or if your fundamental problem is like with this, if you're doing space, typically like there's some really big regulatory challenges. Or if your biggest challenge, in Marilyn's question, I think her biggest challenge is going to be to demonstrate a repeatable, scalable sales process. So whatever it is that is the biggest risk, the biggest potential challenge to you becoming a bazillion-dollar company, I would get the smallest amount of money that lets you demonstrate that you've solved that risk. So if it's technical, what is the smallest check you can get that demonstrates that you can solve that technology challenge? Or if it's a sales problem, then I would say that it's what is the smallest amount of money you can get to show that you can sell repeatedly, whatever that is. Is there a formula to determine raise size? I don't think there's really a formula. It's going to be a function of it's going to be kind of like a function of this ratio, right? It's like, how much of a check do I have to give you in order to get you to the next step? So like we've invested in biotech companies, and like biotech is famously expensive because there's just like tons of regulatory issues, tons of technology challenges. So those first checks tend to be quite large. And as a result, they typically means that like the first investor, like they're taking an insane amount of the equity, right? As far as formula for raise, I mean, I don't think there's necessarily so much. I mean, there are multiples, but at seed stage investing, you don't really have revenue. You don't have EBITDA. You don't have any financial metrics to point to. So I think it's really hard for you to be able to say, okay, hey, we've had, if you had like $1 million of ARR, you might say, hey, $1 million of ARR, for seed stage investments, the typical, multiple is 20x. So I want a $20 million valuation. I need, choose a number, $5 million to address the next risk in my business model. Therefore, I'm going to try to raise $5 million on a $20 million valuation. I don't know if that really answers your question, just because I don't know that there is a formula to determine raise size. But yeah. So I wish there was an easier answer there. Cool. All right, so moving along on this deck here. Okay. So third slide, we get the problem. So I love that we're getting to the problem. I love that there's an articulation of it. Here's my even better, I think, on this one is so this is about propulsion systems for undersea vehicles, right? Well, it just says like middling performance, unsustainable costs, environmental concerns, a different kind of it. I deleted this one. To anonymize the deck. It was just a different kind of environmental concern. Those are problems, but they don't really give me enough information to be like, okay, how big of a problem is this? Is this like a big issue, or is this a little bit of a issue? So I do wish that this was there. I wish there was just like a little bit more for me to understand this problem. So like I mean I love that it's like not too many words, big bold, big, 20-point font. I think that's all great, but I think that they could have done just a little bit more to really paint the picture of the problem that they're solving. Okay. And number two, it would be nice to have something under here that just gave some validation from the customer about this problem, like a quote here that just said, "Hey, underperformance is one of the biggest challenges to, to deployment of, to scaling undersea vehicles, or to use it in this use case." Just something from a customer that doesn't need to be scientific. Just something that shows that you've actually done your homework, that you've talked to a customer. Okay. I actually like this articulation. It's like it was a little high level. It's just like it was more, this solution. It's not proving it, but they've addressed it. It's like this company, their company names, undersea vehicles are powered by their unique product, and then there's a little bit about what made their product unique that was going to do all these good things, and it says these are the outcomes. We've got more efficiency, lower fuel cost per hour. Yeah, I'm actually pretty okay with this one. Again, you're not trying to you don't need to close the deal with your deck. You just need to convince me that you've thought through it and that there's enough there that it's interesting to spend some time on, to take the call. Okay, there's a nice little About Us page. I did think it was a little weird that they check it out. So their first two slides are the team and the advisors, and then like 6 pages later, there's an About Us section. I did think it was a little strange to have that broken up, but whatever. Definitely not fatal. Sorry, question from Sheila. It says a city released an RFP for 20 installations of ARPAth, but it was about $1 million under budget. America's first augmented reality city. How do we negotiate the real rate through RFP process? Is that normal? Sheila, I'm afraid I think that's probably a little bit outside the scope of creating a deck, and I want to be respectful for all the people who came here with for help on their deck creation. So happy to talk about RFPs and price negotiations and understanding price reasonableness, and yeah, so happy to take that question offline. Cool. Cool. There's a little bit more detail about the tech. Cool. I mean, this is a fine slide, but transparently, it felt duplicative of this one. It's like, okay, so here's increased efficiency, lower fuel costs, and it's just efficiency, lower transmission. It's so. I guess I'm like, okay, why do you have 2 slides? Again, less is more. If you can get your slide deck below 15 slides, that's awesome. So just try to be thoughtful about whether you're duplicating information places. Having the logos of government agencies, that's fine. But I'd like to know what they are. Are these people that you have MOUs with? Are they people that you have contracts with? If you're going to put logos of companies, of people, of whoever, please articulate what it is, what your relationship to them is. Okay. Differentiation. Number one, love that there's a differentiation slide. Like the previous deck, I didn't see a differentiation slide. That's awesome that they do. But it says from complex fueling operations to floating gas stations. Seems interesting. My question there is okay, but why are floating gas stations less complex than this? So, yeah, so are these actual decks? Yes, these are actual decks that I redacted. So basically I just took their pages, switched out the imagery, changed the text a little bit, to be able to just show, because I want to be respectful of these companies. And again, this is my first time doing this, so I probably went a little overboard on the redaction, just to be on the safe side. I'm hoping that if we do this again with people's real decks, I won't redact them quite so much next time, so you can get a little bit clearer understanding. But yeah, that's true. I mean, these are generalities. That's true. But again, this is about telling a story that's gets me interested enough to have a phone call where we can start getting into more of the details. So I think that most decks are fairly high level, if that makes sense. So that's great that they had a differentiation, but just to like let you know, so like just to preview this, there was no conversation in here about who the competitors are. Like, okay, you're different, but like, who's doing complex fueling operations today? Like, is it the Navy? Is it Exxon? Is it who is doing this? So I can understand who you're competing against. I would have loved to have seen some sort of here's my competitors, here's how we're different. Okay. All right. This is one of my pet peeves. This just drives me crazy. So I'm actually going to switch over here because I want to talk to you directly about this one. So this is like, I've got an entire video about this on my YouTube channel. This is like kind of like one of my, like I said, it's like one of my pet peeves. Okay, so check this out. This is saying that they've got customer traction. They're showing over here $125 million in customer traction. This $125 million was in SBIRs and some other small grants that this company won. Okay, Toby Energy, thank you so much. I will definitely take you up on that offer. So this is just like a little bit of a pet peeve, because like SBIRs and other non-dilutive federal funding are not indicators of traction. The percentage of companies that get SBIRs that actually go on to sell to the federal government is like 3 to 5%. It's vanishingly small, and the people that do the how do I say this? How do I say? Yeah, sorry. How do I say this? So, and like the people who determine SBIRs and publish SBIR topics and everything else like that, they're completely disconnected from the program offices that actually make buying decisions to like buy stuff at scale. Okay, so yeah, I highly encourage you to, anytime if you have SBIRs, that's awesome, that's wonderful. Put it on the page related to previous funding, because like basically that's what it is. It's like in the same way that if you got a previous investment from like, you know, whatever, a friends and family round, or like some angel investors or another VC. Great, that's wonderful. I want to know that. Put SBIR money there because it's not really an indicator of traction. Okay, cool. Enough about that. It says 18 million in contracts in flight. And then they had the logos of the government agencies that they were coming from. That's cool. And if you show that to like a more traditional VC investor who doesn't spend their life in government data, that might be enough. That might be totally enough. But I live in government land, and so this just raises a lot of questions for me. Is this $18 million of ceiling? Is this $18 million of RFPs that you've responded to? Is this $18 million of actual booked, invoiced, and paid revenue? Like, those are very different numbers. Like, if you have $18 million of like production contracts and with like another $100 million of ceiling that you're probably going to burn through and that you're going to earn, I mean, you've got my attention. Like, I want to invest because that is really impressive. But if it's like $18 million of just ceiling and you've not actually booked any revenue under it, I'm like, it's a little impressive, but I don't know. It's kind of 50-50. And then if it's just like $18 million worth of proposals you've submitted, then I'm like, okay, that's kind of meaningless to me. And then like 1.3 billion in pipeline. That's cool. Like, by the way, you don't need to put any more in your deck. Like, I'm not going to sharpshoot these numbers because you have limited space and you're just here to tell like a high-level story to get me excited. But I am going to press you on this number. Like 1.3 billion in pipeline, that's a big number. And so when you say pipeline, is that like MOUs with government agencies and like Exxon and big creators of undersea vehicles? Or is that like $1.3 billion just because you thought it sounded good, or you just took like the total value of like the undersea vehicle propulsion market and you took 10% of that? Like, I'm gonna press you on that number, so just be prepared for that. But like, again, for a deck, that's fine. Okay. Sorry, I went on a little bit of a not a tangent exactly, but like pretty much every deck that I get there, I see this thing around like, oh yeah, we've got all this traction. Look at all the SBIRs we won, and I'm just like, that's not traction. That is absolutely not traction. Okay, cool. Market projections. Okay, so total available market, surface unmanned, underseas unmanned. Number one, I love that there's a market in here. I love that they've taken the time to actually do these market projections. So that's awesome. The thing that's on my mind here is why is this the progression? So if it is like, I understand that surface propulsion is going to be larger than undersea surface propulsion, which is going to be larger than unmanned undersea propulsion. Like, it makes sense to me that those are smaller markets, but like, why are you starting here? Like, what is it that are these different systems? Like, I guess I would have like almost expected this to be like cut by customer. So it's like, we're initially going after universities, or we're initially going after, this one type of very popular undersea vehicle, or like, I would love to understand why you've segmented the markets this way. Like, this, again, not a fatal problem. Like, if I was interested in this company for other reasons, like, this would not be a disqualifier. But again, I'm like, that's just like I'm thinking about. So when you're thinking about the segmentation of your market, be thoughtful about why you're segmenting it that way. I hope that makes sense. If it doesn't make sense, not a problem. Just drop me a line in chat. So that I'm happy to spend more time talking. And also, I've got a webinar coming up it's either in January or December, talking about making market sizing estimates in the defense market. Cool. Business model, cool. I love this. I love that there's a business model in here. I feel like so many people in the defense market forget about business model. So yeah, I mean, I think this is interesting. Like, this is more about like sizing and the value proposition for each of these customer segments, or each of these value adds to customers. Transparently, I would love to know, like, what is your process going to be? So it's like, I know somebody at this company, we're running a pilot, or I've got access to the prime contractor who makes these systems for the Navy, and they care about this, and that's how we're going to go to market. That's our business model. Or we're going to sell this on a per seat license, or we're going to sell this, we're selling fuel, and we're going to sell the fuel at this much, and we're going to sell it through these channels. So like, I'd love to know more about the operational process to get you there. But again, at least there's something there. You've checked that box, so that's great. But like, talking about first customer, especially if you're a seed stage, especially if you're super early, like if you don't have any customers, please spend like an entire page talking about who your first customer will be and how close you are to actually signing them. That's really important. First customer is by far the most important customer. Revenue projections, 3 million in 2026, 200 million in 2030. That is some insane growth. And by the way, this isn't their real chart. I just grabbed this chart again. I'm trying to anonymize for these people. But like, if you're going to go 100x in 4 years, like, you're going to get some questions about that. Cool. Timeline, love a timeline, basically saying, hey, this is how long it's going to take me to burn through the seed money that I get. I'm going to need to raise, and nobody's going to like hold you to this. It's like, but roughly a year between seed and Series A. Here's what you're going to go do with the money. Here's how much you're looking for, and like that. Okay, I'm just, more than anything else, I'm just glad that you've thought through it. And like, as long as these numbers seem plausible, that's all I'm looking for. Cool. What are you going to do with this raise? You're going to put it into like, I think this said like engineering, production facilities, engineering, whatever it was. Cool. Like, convince me that you're going to do stuff with this money that will lead you to like addressing the core risk that's remaining in your business model. And then thank you. So yeah, I mean, overall, I think this is a fine slide. A fine deck. It addressed, let's bring this over here. if we look at our questions, I think it addressed most of the questions in here. It made this assertion that it's going to be making, whatever it was, $200 million within 5 years. I'm a little skeptical of that, but fair enough. They are articulating a path, and they did articulate a really big market. So okay, maybe that's plausible. I would have loved to see a little bit more about willingness to pay, the size of the problem, how acute the problem is. Okay, is the solution plausible? Yeah, they just to Scott's point, it's like, hey, this was high level generalities, but again, this is a teaser for the product, for the company. I don't need the nitty gritty. It seems okay. So the solution I'm going to take is plausible. Is the sales model plausible? I would have loved to have seen a lot more information here, like who's the first customer, how are you going to get to them, how close are you to selling to them, how are you going to scale from that first customer to your second customer, how much, why, how are you going to be able to expand your sales? Basically, like painting the picture of the financial pathway that takes you from $0 of revenue to that 100 million, or excuse me, 200 million. Would have liked to see that. Competition, I thought there was some articulation about how they're different. I would have loved to have seen a little bit more information about who the competition is, or like how is the customer filling this need today? Would have been great to know. Why do they need the money? I thought they did a good job addressing that. It's like they said, this is how much money we're raising. We're going to use it on this sort of things. Are the projections plausible? I mean, going from 3 million to 200 million in 5 years or 4 years, whatever it was, that doesn't feel like, I don't know, doesn't feel super plausible to me, but it has happened, so I'll go with it. So yeah, that's my take on that deck. I guess my only other reaction to this is I would have loved to have seen the bifurcation of the commercial market and the defense market a little bit more. And the only reason why is that my fear with this deck is that they're going to be really heavy on defense. Like, at least the companies that come to us, I think it's a lot of veterans, it's a lot of people who've had experience around DoD. They know that DoD has a lot of money, that DoD has a lot of needs. So there is, I think, a habit of saying we're going to be Navy centric in this case, and that always gives me a little it gives me pause whenever I think. So I would have loved to have seen, hey, these are my commercial customers, these are my defense customers, these are my defense competitors, these are my commercial competitors, this is the defense market size, this is the commercial market size. That would have made me feel a lot better to see that there is a commercial pathway, so that I could see it's like, hey, this team has a path of commercial sales that they're going to go down, and then they're going to go down the path of defense sales. But I actually would. Anybody else have any other thoughts as they were looking at this? I know that these are high level and they've been probably over redacted, but any other reactions to this deck? Like, other thoughts? I would love please put them into chat. Scott asks, I use AI ChatGPT to search the competition and compare to my solution. What do you think of that? Honestly, I don't love it, and here's why. Like, if you're looking for money, like if you're coming to a venture investor, you're probably looking for like $1 million or more, and like, I don't mean this in a mean way, but like if you want me to give you $1 million, I expect you to know your market and to have like really done the work to know it for yourself. Now, if you use ChatGPT, like when I'm doing my own analysis, like when I'm looking at someone's deck, or like every couple months I'll have like an idea for a new company. I'll be like, oh, I want to start a company doing X, Y, and Z. Let me see who's out there. And I'll go to ChatGPT, or more often than not, I'll go to like G2 Exchange, or I'll do a search, being like, hey, who are the competitors in this space? What are the best tools in this space? And just like I'll find out about them. Like that'll be that'll be like my first analysis, and like that'll give me the initial list, and I'll be like, oh, okay, these are the 5 companies that G2 or Forrester or Gartner or whoever it is, or PitchBook thinks are competitors in that space. Let me go take a look at them. So generative AI, LLMs as a jumping off point for your own research, sure, by all means. But I would not rely on ChatGPT to give you a full answer. And I mean, like, this has happened in pitches before where like somebody's on the call and like maybe it's like a company that I brought to the table and I'm like, oh, this isn't really my, so like one of the people I work with is a doctor. He runs our like the bio investment practice effectively for the fund. And I like every once in a while I'll find a deck where I'm like, oh my gosh, this looks really interesting. I'll send him the deck, and when the doctor comes back, he's like, hey, but what about these 3 other competitors that are also in that space? Oh man, I feel embarrassed. Like, because I was the one who brought the deck forward. It like got through my review, and so like, you don't want to be in a situation where the investors are identifying competitors and identifying differentiators and identifying weaknesses in your business model, because like if it doesn't, it almost doesn't matter. Like it almost doesn't matter how good your pitch is. If I've identified that your work is incomplete, or that like you've outsourced your thinking to generative models, like it's kind of over. Like I need to trust that before you want my money, or it's not even my money, it's the LP's money that they've entrusted with me to deploy and invest. And like, it's not even, I'm not even a GP there. Like I'm advising and supporting the decision makers. So like, yeah. So yeah, I feel like I'm beating a dead horse. It's a fine place to start. I would not, it's not a fine place to end your analysis. All right, and last but not least, got one more company that we're going to look at their deck. All right, so let me get a cup. Let me get a swig of coffee here. All right, here's our deck. We've got next generation sensing and awareness. All right, and by the way, this is not the company's name. This is just I went to Canva and just got like 3 of their deck templates and then used that and like fed the information in. Just again, I try to be really mindful about not disclosing anything about who I'm talking about here, because I am like giving some criticism of these decks. I hope it's all constructive criticism. That's my intent. Like none of this is meant to be like mean-spirited or like I'm not even trying to roast anybody. I'm just trying to like help share my perspectives to help you make better decks. So as a result, so I don't know who Ingood is, but they're not the company. Okay. So once again, we're starting with logos. Same observation as the last 2 decks. Please start with the problem. Like, if you're doing freaking space, and the defense logos are like Space Force and Air Force and like NRO, then it's like, ooh, I'm intrigued. That is highly validating. But if the logos and the problem don't really match up, then I'm like, it's hard for me to know. And it's hard for me to know how much credibility this gives you if I don't know the problem. So please start with the problem, followed by the user, the customer. That way it gives me context for everything that comes after. Cool. All right. Second thought is same as I said before. It's like, what is the relationship to this? So if you say like, hey, I'm doing space and I know that Space Force does a lot of space stuff. Well, it's like, cool. But if you say it's like, these are our active customers, or we have a CRADA with these people, or we have Marilyn, thanks for signing in. Hope to see you on the next one. If so, whatever it is, like, help me understand what this is, what the nature of the relationship is to these people, is a really good thing to do. All right, because like frankly, if you don't say who these people are to you, I assume that it's nothing. It's just like you had one conversation with somebody at that agency and there's nothing more. Because if you had a CRADA, if you had a contract, if you had an SBIR, if you had something, I would expect you to say what that something is up here. Cool. As before, we're going straight into the team, and like, look, I'll switch over here. I mean, there's two philosophies in the venture space. Like you either bet on the jockey or you bet on the horse. And the idea is basically the horse is like the company and the technology and the idea, or you bet on the jockey. And the jockey is just the idea that I'm going to bet on this team because I think this team's really great and they're going to be able to figure stuff out. When you put the team slide at the very beginning, it tells me that you're trying to ride on your team, that your team is so impressive that I would say, wow, whatever it is they're going to do, even if I think their ideas a little half-baked, they are such a strong team that they'll pivot their way from a shaky initial idea to a really strong spot. Whereas like if, and that's fine. Like if you've got like a team of repeat founders that have like, you know, a million, you know, if you've got like 3 successful exits and you've like, you're a repeat superstar entrepreneur, well, maybe that's a good thing. Maybe you should put, you know, the team at the front. But again, I always say put the problem up there so that when I see it's like, here's the team member's name, here's all the companies they've worked for, here's the degrees and from fancy universities that they have. I can be like, oh, I see why a PhD in chemistry is going to be helpful to solve this problem. It just gives me the context that I need to appreciate what the deck is telling me. So yeah, that's my reaction to having the team up here. It's like you're selling the team over your idea, which may not be the bad thing, but that is the message it sends me. Okay. Here's the problem statement. Continuous edge ISR, intelligence, surveillance, reconnaissance, so intelligence, you know, observation, coverage is really hard. And then it's got a quote, you know, this is not the actual page, but it's like this was a quote that basically validated that the DoD thinks this is really hard. I like it. Again, you know, it's high level, but that's all that's needed. It's just like, okay, they've identified a problem, they have validated that that's a problem. Cool. Then they have a little bit of their solution. Again, this is not the real image. This is something I generated, I think, on some like generative AI. I think some image generation site. I just asked them about like for like ISR video footage example, and it was like they showed what it looked like. It's basically it's like this is what the video quality looks like today from an edge device, and then and then it was like then they had like another picture over here, which is like here's what it looks like from our device. Awesome. I love that. It's like, here's today. It's all grainy and tough to see. Over here, this is us. It looks great. All right, cool. I love it. That's a nice little synopsis of the solution. Okay, now we go straight into the market sizing, and again, you know, like I kind of like this. I like how here's what I like about this slide. It's like they said, okay, they show their math and they're doing like a little bit of a bottoms-up analysis, right? They're saying there are 2.5 million ISR assets deployed. All right. I have no idea if that number's accurate, but you know, it seems plausible to me. And they think that they can get $750 per device in annual fees. I might not believe that. I might, or maybe I would. But at least they took the time to show me their math at a high level, which I like. I just like that they've shown their math. And you know, can they really get to 1.9 billion annually? Maybe. I don't know. Like, but again, at least they've shown me that they tried, that they're showing a little bit of how they got there. So I like this. This is what I would call like a more of a bottoms-up market sizing slide, which I like. Let's contrast that. This is not from this. This I actually pulled from a separate deck, but I just wanted to compare and contrast this because I thought it'd be helpful for you guys. So this deck, which was obviously a totally different technology, it's about disease and health. They did a top-down analysis where basically they just said, you know, and their thing was their thing was around like a medical device, so medical treatment, and they took a top-down approach, which was to say, you know, global disease costs are $89 trillion. First of all, $89 trillion seems really high even for global anything. But putting that aside, by saying top down, it's like it's much less meaningful to me. Like I have no way of pressure testing this, and it's really hard for me to compare and contrast. It's like, hey, what percentage of 89 trillion can this company actually capture? Whereas with this one, I can say it's like, okay, what percentage of these $2.5 million ISR assets do I think they could actually capture? And do I think that $750,000 annual fee is plausible? Maybe it is, maybe it isn't, but I can at least wrap my head around it. Whereas this one, it's really hard to, because it's so vague. Okay, so in general, I highly encourage you to do bottom-up market sizing analyses. Cool. Now we're back to the original deck, so not the health one. All right, I like this raise slide. It says, this is how much we're asking for. We're looking for 1.5 million. We're going to use it to hire or to expand our development team, and that's going to last us 18 to 24 months. So basically the same as that timeline slide from the deck we saw previously, but nothing wrong with this. That's enough. Cool. And then now we get into the appendix, and the appendix was basically all focused on like technical specs, which is fine. It was like a bunch of research studies that they had done. All right, so let's switch back over here. So even better ifs for this slide are competition. Like they said, it's like, hey, this is what they're using today. This is what they could be using if they used us. Look at how much better it is. Awesome. But like, who are the competitors today? And like, help me understand a little bit of how you compare and contrast, not just, hey, we've got better resolution, which is important, and that's a critical differentiator. But it doesn't really answer, like, I want to know that you know who the current providers of ISR, vision support are. So cool. There was a fine valuation, market size. That's cool. Does the solution seem plausible? We didn't get into it, but actually in the appendix to this deck, they actually did do some nice stuff there, where they talked about like, hey, these are studies that we did with these different universities that compared and contrast the resolution and the use. They actually did do a really nice job validating that their solution is plausible and they could do it. Is the sales model plausible? This is another place where I think there's probably an even better on this deck. I would have loved to have seen who their first customer was, or some more, like they had put a bunch of logos up of different agencies and government contractors, but like, help me understand where you are to getting that first dollar. Like, have you already gotten your first dollar from a customer? Are you under LOI? Are you under an MOU? Do you have a contract that you haven't invoiced? Like, what is your path to your first sale? That was vague. That was unclear to me. So it was hard for me to understand whether they had gotten any traction transparently. So I would have loved a little bit more there. Would have loved like a little bit of like a quote about, or like a page about who their customer is. Because like, fair enough, they said that there are 2.5 million ISR assets out there, but like, cool. Who is the person? Who is the person using that ISR feed? Is it an intelligence analyst? Is it a infantry soldier who's like out there using it? Like, help me understand who the person is and why they care. Like, why the current solution isn't enough. Okay. Talked about the competition. They did a good job talking about the money they need. And then, are their projections plausible? They didn't really share a lot of projections, so hard for me to say. I would have loved a little bit more of like, we're going to make this much money in 2026 and 27 on through. But yeah, those are the three decks. So I'm happy to hang out and answer some more questions. The only other thing I would ask for you guys is, so I'm planning on doing a bunch of, like I said, more tactical presentations on like how to do individual analyses within this space. Like, how do you build a market slide for the defense? How do you identify your competition? If there are specific topics that you would like me to address and do a webinar about, please put them in there. The next couple of webinars are going to be much more like hands-on, like here's how you do stuff, whereas this was a review. So next ones will be like, here's the systems, here's how you get the data, here's how you analyze the data, here's how you build the slide. That's the thought. If you want more like deck reviews, happy to do it. Please send me decks. Going forward, I'm hoping to do less redaction so that you can see like more real decks. So yeah, that's what's going on. Please check out my YouTube channel where I teach about a lot of these programs so that you can like get an understanding of what's going on ahead of time. And if you have any suggestions on how to make these webinars more effective and like higher value to you, please let me know. So thank you. And let me go into chat. Got a couple questions here. Okay, Sheila says, I have a first slide, logo and tagline, cinematic augmented reality movie pathways that educate tourists and motivate smart cities. Second slide, traction. Third slide, :4 problems. Does this seem right? Let me think about that for a minute. I mean, the first slide, if it's just like your title slide with like logo and tagline, sure. Like the cover slide, I don't really care, as long as you like, it looks nice. You know, it's like your name, tagline. That's great. That's enough. Second slide is traction. I mean, if you've got traction, then yeah, that's actually a pretty good place to start, because like if you said, hey, this isn't just a bunch of vapor. This isn't just my wild ideas. Real people are really paying me for it. That is extremely validating and will shape the way I read the rest of the deck. Like, if you have no traction, then every assertion I read about like, oh, here's my customer. It's like, are they really going to be your customer? Or it's like, here's how much they're going to pay for it. It's like, are they really going to pay? Whereas like, if you have real traction with like real dollars and real contracts, then yeah, that's a really powerful place to start, because that like cascades through how I view everything else. So I like that as a second slide. For the problem, yeah, no, I think that's fine. The 4 problems, yeah, that seems good to me. Like, I like that. It's like, so but if your traction's shaky, or it's like a bunch of like, hey, we had a good conversation, I might switch that and put the problem first and then the traction a little bit later. But overall, yeah, no, I think that seems like a perfectly good sequence. Framatron, best way to contact offline. We have a NASA-funded tech that solves a variety of aerospace problems. One is closer to the bazillion I had been cautious pursuing it. Maybe it's worth. I'll put my email into chat. Oh yeah, let me just throw my email into chat, and yeah, feel free to hit me up offline. I'm pretty busy, so I try to respond, but my apologies if it takes me a minute. There's my email. Feel free to drop me a line. Trackton statements. Experience our MVP on 39th Street in Oklahoma City. There you go. If you're in Oklahoma City, go check out the Virtual Cities MVP. That sounds very cool. Funded by the Preserve Route 66 grant, funded the National Trust. So it's kind of a grant, maybe not traction. Yeah, that's a tough call. Like, it doesn't hurt, I would say, to say that you've gotten some grants from somebody, but I would encourage you to maybe put that toward the end under previous funding, because remember, you've got like 3 or 4 slides to give me a first impression, and I would love to see the first impression is, hey, there's this big screaming problem that people want fixed. Second slide, here's the name of the person. It's Jane Doe is the person with this problem, and it is such a big problem that they've put, here's some quotes about how big of a problem there is, or like, according to budget, according to some market research firm, the market for solutions in that space is $500 million a year. So so it's start with the problem, a little more definition about who the person with the problem is and how serious the problem is to them. Then maybe from there into your solution, what makes your solution different. Like, honestly, if you look up Guy Kawasaki, he's kind of got like what I think that's like the industry standard pitch deck. If you just Google for like Guy Kawasaki 30-20-10, it seems weird, but it's a great place to jump off from. And I think if you go on Canva, they've got like a bunch of free pitch deck templates that are actually very nicely crafted from like a design perspective. All you have to do is just like swap out the photos, swap out the text, and I think almost all of those decks are based on the Guy Kawasaki one, just because I think it just does. If you follow that, you'll probably address all the topics all the questions we went through, and then if you just supplement that with like here's the defense flavor of blank. Here's of market. Here's the defense flavor of the problem. Here's the defense flavor of the, maybe add a couple slides just to address the defense use cases if you're pitching dual use and defense VC. But yeah, that's my thought. And Camilla, thank you so much for joining. And yeah, Framatron, thank you so much for joining today. Like I said, happy to stick around for a few more minutes if people have questions. So yeah, fire away. All right. And if there are no more questions, again, I'd say thank you so much. Hope to see you in the next one. And yeah, have a great Thanksgiving. Bye.